Now, we all know today was a rough day in the market, but we're going to go over one bit of information that might be able to change your situation if you're down and why this investment might recover quicker than others. Before we get started though, like, share, subscribe to our channel. You know, we're making painful profits for everybody. Of course, Mario Payne, beautiful, Jacksonville, Florida. 16 years as a financial advisor, 12 of those as a certified financial planner, managing over $250 million in assets. Woo! I'm doing something right. But today, we're going to talk about why the market went down, and more importantly, that one investment that might have us recover quicker than others.
Joining us right now for a deeper look at how the Fed will be looking at the new CPI data, former Fed Governor Frederick Mishkin. He's now a Columbia University professor and a CNBC contributor. I'm going to read you this. This is Jason Furman, who's just taken to Twitter, our old friend at Harvard. He says, overall, it's a mystery to me why anyone thinks the Fed might cut rates in June. The labor market data is screaming a cut isn't needed for one side of the mandate, and the price data is screaming that it could be dangerous for the other side of the mandate.
All right, so what constitutes a Fed cut? Well, right now, rates are basically 5.5% right now. What does that mean? When the Fed rates are high, then that means in our bank accounts, that's good because our money market that was paying 2-3% is now paying 5%. However, that's bad because as a company, I have to pay more interest when I borrow money. And when companies have to do that, well, my friends, that means a lower profit margin. So investments like small cap companies, investments like Enphase, Tesla, manufacturing companies, those companies usually do not do good in a high interest rate environment. Hence why in 2020 they did so good, but when the market went down in 2022, they went down so bad and they have not recovered like the overall market. So people are hoping that if the Fed cuts rates, larger profit margin, manufacturing companies who usually borrow more money from the federal government will make more money. Didn't happen though. As it was supposed to happen in May, it looks like it might happen in September. Some people think it might not happen at all this year. This is what this person has to say.
Are you in agreement or disagreement with Mr. Furman?
Well, I wouldn't use this screaming so strong in that regard. But that clearly the Fed has made a commitment to keep inflation low and get it back to its 2% level. And I think that's absolutely the right thing for them to do. And the path was looking pretty good for a while because inflation was coming down. There was actually some progress on tightness in the labor market. It's not seen in the unemployment rate, but when you look at vacancies relative to unemployment, which is a measure that seems to work a lot better in recent years.
Now, a lot of jibber jabbers, but basically what he's saying is that the Fed was thinking about lowering rates. Inflation came in hot, which means it's higher than expected. And he's giving us the case why they are still going to cut rates. Now, some people are calling this cap, stop the cap, but it's good information because we're able to see why people play both sides of the fence. And again, this investment I'm going to talk about should do better if the Fed cuts rates or they don't.
They made a lot of progress, but the problem is now that the economy has been very strong and basically the decline in inflation is stalling. Now, also, most of the decline in inflation was from the removal of the supply shocks and supply chain problems. But
so, Rick,
still the Fed's got a lot of work to do.
Take us inside the Federal Reserve right now. I mean, I could take.
So another reason why inflation was higher, right, is because we had supply chain issues. Remember, things being shipped. Like I remember I ordered something from IKEA 2 years ago. Typically, it took like a week. It took 6 weeks because things was on back order in China. Now that's smoothing out. So when that's smoothed out, Fed has a decision to make when it comes to that. So all those issues where it took longer for us to get products drove up inflation. Right now, as that's easing, you would think that would drive down inflation, but that has not worked. So the Fed all along thinking inflation would go down because of supply chain issues not being an issue, they're wrong.
I imagine they're having a party inside Mar-a-Lago right now. I want to know what's happening inside the Federal Reserve right now, inside a pity party, which is to say, what do they do? when they see numbers like this.
And yes, former President Trump has to be happy right now, because when the Fed lowers rates, that stimulates the economy, right? Hence what happened, of course, during COVID. We had rates around 2.5%, it went to zero, and the economy boomed for 9 months. So if they lower rates, the economy is going to do so good during an election year. That would definitely favor President Biden. But now, because of this hot or higher than inflation number, it is not that good for President Biden. And we know what Trump is going to do, right? If the Fed thinks about lowering rates in September, Trump is going to say, we're playing politics, right? They're doing that to get Biden reelected. It's a rigged election. Do they want to go through that? And remember, Jerome Powell was actually installed by President Trump. So, not saying it's a conspiracy theory against Biden, but what I am saying is it's going to be a lot of people on the Republican side that's going to do whatever they can to make sure the Fed does not lower rates in September to stimulate the economy right before the election. But my profiteers, it is one investment that I think is going to explode over the next week, 2 weeks, 3 weeks, no matter what happens with the Fed. And that, my profiteers, is Bitcoin. Now, yes, we know Bitcoin is very, very volatile, but the federal government bought over $1 billion of Bitcoin. We have banks that are buying Bitcoin to droves of 100 million, 400 million. So the more banks buy it, the more it's stable. And historically, Bitcoin has averaged over 90% a year. Man, we'd be happy to get 90% with the stock in 5 years. It does it 1 year. And as we can see, it went down like the market. Market in 2022, NASDAQ went down by 40%. Bitcoin went down even more by 78%. But as things recovered, it recovered a lot better, right? Up by 340% from its bottom. We know the market is up, but not up by 300%. Not even up by 100% from its bottom. It's recovering, and today was a bad day in the market. So we would definitely recommend Bitcoin as something to make money quicker. Now, not telling you what to do, recommend it for myself, for my clients. If they want to get into Bitcoin, this is what you want to do, because we don't want to do it through Robinhood, fees, or have it off wallet. We got to buy it yourself, and if you lose your password, you're screwed. So I would say we want to do IBIT. IBIT. And the reason why, look at that, already up 80%, and it has literally came out in January. And we have this through iShares. Fidelity has their own ETF tied to Bitcoin. Vanguard has their own ETF tied to Bitcoin. As more companies are buying up Bitcoin because of the halving that happens April 19th, where they basically cut Bitcoin in half, halving, right? What's going to happen is that it's going to be less supply. It's always supply and demand. The less supply, if the demand stays the same, the value goes up. And as the federal government buys more Bitcoin, as banks buy more Bitcoin, China is stopping people from buying Bitcoin. They're going to want to get to the race, so they're eventually going to allow their citizens to buy Bitcoin. When that happens, this is going to go up. Most people predict that Bitcoin is actually going to double. It's at basically 70,000 a coin. That's 140,000 a coin. If this doubles my profiteers because it's basically tied to Bitcoin, that means we're at right now $40 a share, $80 a share, my profiteers. Whoa, keep on going. Whoa, that's crazy, right? At $80 a share when literally it started at $27 a share in January. So yes, the Fed definitely might not lower rates like we thought. And my baby, TMF went down by 7%. Still think it's going to double though over the next 3 years, because as the Fed starts lowering rates, long-term treasury bonds are going to go up like crazy. So TMF at a 7% discount. But if you want something that, can't say it's a sure thing, but because of the momentum that's going on, might outpace the market dramatically, especially if the market continues to bounce down or sideways because of the lack of understanding what the Fed's going to do, symbol IBIT, might want to look into it. All right, my profiteers, hopefully that gives us information. Yes, it's not fun because the Fed does not know what they want to do, and inflation is high, but buying Bitcoin, now with all your money, you want to be diversified, but Bitcoin may give us a way to outpace inflation, outpace the market, and maybe get to a bag if it continues to go up. But comment below, we in Bitcoin, not in Bitcoin, rather buy Bitcoin by itself or buy it through an ETF. Me personally, safety through an ETF. That's just me though. Anyways, let's make some painful profits together, y'all. Peace.
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Painful profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, painful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you knowing it could be different, you knowing.